Investment in South Korean robotics startups has been running hot since the very beginning of this year. Within the broader startup funding landscape, robotics companies have steadily grown their share of total investment, accounting for 2.6% in January, rising to 5.8% in February, and holding at around 5% through mid-March. The upward trend is clear, and it shows no signs of slowing. The most active category by deal count is humanoid and wearable robotics. 5 companies fall under this umbrella index: Robotics Humanoid, Chameleon, Hotel Cleaning Humanoid, Hexer Human Care, Wearable, Robotics Soft Wearable, and Vivid Robotics Rehabilitation and Senior Healthcare Wearable. The global humanoid boom, ignited by developments overseas, has clearly found its footing in Korea's early-stage investment market as well. Autonomous and logistics service robots represent another strong current. Tweeny raised 23.4 billion won for its autonomous robot platform, while XYZ secured 13 billion won for service robotics. What distinguishes this segment is that companies here have largely moved past the proof of concept phase and are already deploying in real-world environments, a fact that makes investors more willing to bet on near-term returns. The third and perhaps most forward-looking theme is physical AI and robotics software infrastructure. RLWD stood out by raising 39 billion won in a seed round from conglomerate affiliates and others, a striking sum that reflects just how much investors are willing to pay for a foothold in what has become one of the hottest global keywords in deep tech. Other companies targeting industrial and construction automation, including WithPoints, Deft Robotics, Robocon, and Ani AI, also attracted backing. Robocon, in particular, closed at 10 billion won Series C to pursue a niche in construction site robotics. The stage distribution of deals tells its own story. Seed and pre-seed rounds account for nearly half of all transactions, signaling a vibrant appetite for brand-new entrants. At the same time, more established players like Tweeny and Robocon are closing large rounds that validate their market traction. The result is a bipolar structure. Both ends of the maturity spectrum are thriving, but the middle ground of Series A and B remains relatively thin. That gap will be a defining challenge whether the crop of early-stage winners from early 2025 can successfully bridge to their next round of growth. On the investor side, one of the most notable shifts is the visible participation of large conglomerate-backed investment arms. This is not simply financial diversification. It reflects a strategic calculation by major players in logistics, manufacturing, and mobility industries that see robotics not as a standalone bet, but as a core pillar of their own future operations. Korea's robotics sector, it seems, is poised to grow not in isolation, but in close partnership with the ecosystems of the country's industrial giants.